From ports and airports in India to abroad, power, gas, infrastructure, media, cement, green energy, to even the cooking oil some of us use at home, Adani Group has their presence, and a significant one, across various sectors. However, doubts have been cast over the group, with Hindenburg Research, a US-based short seller, alleging the Adani Group had engaged in a brazen stock manipulation and accounting fraud scheme. It has also accused the group of improper use of offshore tax havens and flagged concerns about the group's high debt. The developments, it seems, have started to cast a shadow on group's businesses. Over the last few days, various rating agencies such as S&P, Fitch and Moody's have recalibrated their stance on the group's assets. Business-wise too, the group has suffered minor setbacks, with Uttar Pradesh back home and Bangladesh going back to the drawing board as regards select projects awarded to the billionaire tycoons' companies. And the markets have not taken the development lightly. At the bourses, Adani Enterprises, Adani Transmission, Adani Green Energy, Adani Power, Adani Total Gas, Adani Wilmar and NDTV, ACC, Ambuja Cements and Adani Ports and Special Economic Zone have been in the line of fire ever since the report was made public. Some of them have already halved in value since the report was made public in the last week of January. But given the sheer size of the conglomerate and the various sectors of the economy its businesses operate in, is the group too large to fail or default on its debt obligations going ahead? Here are some numbers for you to digest. Gautam Adani was the third richest person globally not too long ago, with his wealth estimated at $138 billion as on November 15, 2022, only behind Bernard Arnault and Elon Musk, according to Bloomberg data. At the peak, the Indian tycoon was the second richest. However, the scathing report and the allegations saw the Indian business tycoon drop to the 13th spot, with an estimated net worth of around $78 billion as on February 2, 2023. The market capitalization of listed Adani firms stood at 24.8 trillion rupees at its peak in 2022 and nosedived to 10.43 trillion rupees as on February 2, 2023. Based on full fiscal 2021-22 or FY22 numbers, Adani Group was the fifth largest in India. The listed companies clocked in net sales of 2.32 trillion rupees in FY22, only behind Tata's, Mukesh Ambani's Reliance Group, Aditya Vikram Birla Group and HDFC. The consolidated profit after tax for these companies came in at 18,146 crore rupees in FY22, Bloomberg data show. And over the past 5 years, the group has seen a meteoric rise in its fortunes. Net sales of Adani's listed companies grew from 1.26 trillion rupees in FY17 to 2.32 trillion rupees in FY22. Profit before interest, depreciation and taxes of PBDIT leaped 155%, while the net profit surged 1,536% during this period, data show. Independent market analyst Ambrish Baliga believes that Adani Group's fortunes are closely tied to the economic projections India is forecasting. The Adani Group, he believes, is too big to go under, but the project financing issues, given the recent developments, could be a thorn in the rosebed.
A group whose market cap was more than 20 lakh crores, and even after this crash, it is still worth more than 9 lakh crores, comes under the bracket too big to fail. When we use this term, it doesn't mean they can't fail, but when they fail, it can have a domino effect on the markets as well as the economy. But talking about the Adani Group, I doubt whether they would go under. They have solid cash generating businesses, and the sectors they operate in are expected to do very well, directly linked to the economic growth India is projecting. In fact, in most of the sectors they operate, they are among the leaders. I don't think anybody has doubts about the business prospects. It was always a question of excessive valuation, which is now getting corrected, as the sentiments are adversely affected post the Hindenburg report. The drastic cut in the market cap is not a direct threat to the businesses of the group companies, but we may not witness stratospheric valuations anytime soon. This crash will affect their fundraising ability in the foreseeable future, which could in fact have impact on their efforts to reduce leverage or fund aggressive expansion plans as well as inorganic growth. So it's possible that some of the existing projects as well as the prospects of future projects could get reallocated.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.